Hey guys, what's going on? Coming at you with a Friday morning video. Today I wanted to talk about stock that reported yesterday after the bell. It's a stock I've been actively buying. If you've watched my channel, I've let you guys know when I buy and what percentage. This is a top 8 position of mine. I've owned this stock since 2019, and that would be Meta. Ticker is FB, formerly known as Facebook. It had a crazy rally yesterday. It had a 16.3% rally. Crazy part is that we can't forget about this. Facebook really, or Meta, didn't really have the best earnings report. Like nothing was like smashed out of the ballpark or really anything crazy. So it just shows you if a stock is so undervalued. For example, the cost base of, or the share price of Meta right now is 203.50. This stock, not even a year ago, was $325, $350 a share. Even at that, the PEs and for where this company's going, I didn't think that was a crazy valuation. I mean, this stock one day will 100% be a $450, $500 per share stock, in my opinion. Their balance sheet's amazing. Their growth is amazing. They're going to be the pioneers of the metaverse. I really think there's an opportunity there, and they see it, and they're really putting their money where their mouth is and investing. Their cash in the balance sheet might keep depreciating slowly because they're so heavily invested in stealing talent from other companies like Google, Amazon, Microsoft, and all that, because they need the best developers in the world, and I think they get them. So that's kind of my thoughts as a whole on Meta right now. So you have to remember, like a 16% swing is a massive, like that's kind of like my goal for the year, like 15, 20% year over year. I feel like I win every year if I do that. So if you bought at the bottom before, yesterday, you basically hit my year percentage with this stock. And Meta is obviously not a very small company. It's a large cap, right? So it's $541 billion market cap right now. Like that's massive. You know how much money has to flow in for it to move 16%? Like, millions and millions and millions and millions of dollars, maybe billions. So it just shows you how volatile the market is, and people are willing to buy a stock. They just kind of are it's a very fearful market right now. So my cost base is 195.84. So I'm officially now positive on this stock as a whole. I was buying at 175, 180, pretty aggressively since March. So feels good to build your position out, get well below the current share price. Do I personally think this stock's going to get back down to 175 levels? Honestly, I really don't see it unless consumers just do a complete U-turn, stop spending. The Fed does like a surprise 3/4 point rate hike. The war in Russia-Ukraine gets like super bad, and no one's there to bail us out as far as giving stimulus. Something like that would have to happen. If you look at the earnings as far as the credit card guys and Apple, I'll talk about that in a second, and just consumer spending, I just don't see it. I mean, people are still spending. I mean, the economy, inflation's out of control, but at the end of the day, people are willing to take it on the chin and keep buying. So I don't see a recession coming in the near future. I really don't. We'll see it coming, and if I see it coming, I'll let you guys know and why. So this just shows you how quick the market can flip. And this is a large cap. So imagine when the large caps find their bottoms and, small caps and mid caps destroy earnings, whenever that day may be, it's going to come. If a large cap can move 16% in a day like that, what can a small cap do? It could pop 30, 40, 50, 60%, depending on how beat down it is in the valuation, or, what the earning and guidance is. So that just, this should get you excited in the market of the summer and fall and maybe the back half of the year, because we had a very rough first half, obviously. So yesterday the Dow finished up 1.8%, S&P finished up 2.4%, NASDAQ finished up 3%, my portfolio finished up 2.3%. A lot of that is because Tesla is my biggest position in my portfolio. It had a pretty bad sell-off yesterday. Just there's rumors that maybe Elon's dumping shares to be able to afford Twitter and just bleeding off, and maybe people are anticipating that happening because that's part of the deal. Basically, he's got to sell some of his shares to raise capital to buy it. So whatever that may be, it's not the end of the world, but Tesla did pull back quite a bit yesterday, which hurt, I think, my overall portfolio percentage. but still great. 2.3% is awesome. Apple, let me see where I'm at here. How quick I have to go. So, okay, I got plenty of time. So Apple is just reported earnings after the bell yesterday at 4:30 Eastern time. They did say that there are going to be supply chain issues most likely, and it's going to hurt their guide. So, well, let me rephrase that. Apple does not ever release a guide, but they did say there is going to be supply chain issues in the next quarter, just due to the war and, you know, all the chip supply issues, and the war just put them over the edge basically, from what it sounds like. They don't issue a guide, but this is about the biggest guide you're going to get from them. So if I was a betting person, they're basically trying to tell investors, hey, we're a multi-trillion-dollar market cap. I know a lot of people flee to safety in this stock. Just be prepared if we don't crush earnings like we just did right now next quarter. That's basically how I interpret it. So, but Apple, you know, A+ in this Q1 earnings, they destroyed it. They just continuously keep growing and growing and growing and just killing it. So it's kind of holding up the market in a weird way because it's such a big market cap. Yeah, they never forecast. I just said that. So you got to take that with a grain of salt. I did actually in January, when I basically went almost all in, I wanted to raise some capital to keep investing in small and mid caps that were really beat down, and obviously more beat down now. I did sell my Apple position at 170. So I don't regret it because I think Apple right now is 160, 155. It's just floating around there. So I feel like I made my profits. It was a long-term investment. I had the stock since 2018. It was a triple-digit ROI when I sold it. So limited tax, triple-digit gain. It's lower than what it is now, and I rotated that money into stocks that are still currently beat down. So we'll see how that pans out long-term. So kind of makes me feel good because I think the current, you know, market cap where it's at right now, in like the 150, 160 range, I think even if the small mids and maybe other companies grow this summer, investors might be a little weary about that supply chain issue they were talking about. So we'll see. Amazon also reported after the bell yesterday. They had a 10% loss after earnings. Kind of makes sense. This is like the first company that said the consumer actually slowed down in spending. My theory is that people want to travel, people want to get out of their house, people don't want to shop online anymore. They just want to get out and do things. I don't think it's really a consumer spending issue, like as far as a whole, like restaurants and vacations and buying nice things. I think it's more of a stay-at-home play issue where people are, you know, leaving and don't want to shop online anymore. So the stock did miss on guidance, so it did fall 10%. They did say there's a loss and a slowdown, but like I just said, I just explained why I think that. They also had a big investment they put in last quarter in Rivian, and I never liked the Rivian play. I always thought it was overvalued when it IPO'd. They really haven't produced anything on the road yet. They haven't really proven themselves. There could be a ton of issues. They're going into the electric car market in a very rough time with supply chain issues, and it's a new product. It's a new whole thing with electrifying vehicles. So I don't know why Amazon really did that unless they're just looking really long-term betting on them. But that obviously hurt their earnings because they're so heavily invested in Rivian. Rivian had a terrible quarter. So that's, that also hurt Amazon. And then also they gave weak guidance for the rest of the year. So, that's a big company. It will be fine long-term. To me, if this stock gets to around, which sounds crazy, if it gets sub 2,000, I'd be interested in buying the stock. This is a stock long-term that's going to kill it. They're going to keep growing, but it might have just got a little overvalued at 3,000 or 3,600. I think there's, big things for this company in the future. But so that's kind of my thoughts. Love Meta. Apple might be a little sketchy next quarter. Amazon might be a little sketchy next quarter. So I'm glad I'm not in this, sold this, and I plowed money into this and it went up. So I feel like I did that pretty well. I will continue. My position's kind of built out in Meta because I was buying it in 2019 pretty heavy. Took a 2-year break from buying when it ran, and I kind of just average cost down. I have so many other stocks that are beat down. This is like a top, a top 8 position of mine, of my 17 stocks. So I'm content with it. If I didn't own this stock right now, I would probably be buying right now just because I like it for the long term. But because I'm up on my cost base, I'm really not interested in buying it in 200 plus. So that's really all I got. If you guys like this video, make sure you subscribe. On the road to 800 subs, we're moving pretty quick, and I really appreciate you guys subscribing. Till tomorrow, peace.